120 minus 1060 is what?
I think it's 160. Yeah, 160.
160. It's another familiar number. If we were thinking that's something from our past, a blast from last week's past. I know it's been a week already. 160 plus 150 then. Correct?
Yeah.
Equals what?
That's 310.
$310 minus 30 equals
280.
the 280 profit that we want over here. Now you know
And it
that
says profit earned at
Yes.
$10.
from the previous page. Okay. So there are two ways that we can work out this profit, correct? Using the business equation. How you might say, well, do I need to learn this crap? Well, unfortunately you do. Okay.
Let's go with the equation again.
The business equation?
Profit is equal to what? What?
Okay,
What?
should I move this again?
Yeah.
Okay, let's start over again. For the business equation, profit is equal to the increase or decrease in assets
Net assets and
and net assets in the current period. That's important. I represents the increase or decrease in net assets in the current period. Plus D, which represents what? Drawings in the current period. Minus C, which represents capital introduced or capital investment in the current period. Together, they total profit on the left-hand side. Okay. So, if we take the increase or decrease in net assets, well, the current position in net assets was 1220. The previous position would be what? 1060. So the increase or decrease would be what?
160.
Is that an increase or decrease?
That's an increase.
Increase of 160. Does everybody see that?
No. 1220 minus 160. That's profits for both. Profits from last period minus the profit from this. Assets from last period minus the assets from this period.
What are the assets for the current period?
1220.
1220.
And what are the assets from the previous period?
1,060.
And we're looking for the net change between the current minus the previous.
The increase in that asset.
Yes.
So, okay. I'll figure it.
The difference is 160. And remember, this is previous. This is previous. And this is current. Current exceeds previous by 160. And therefore, the net change is an increase of 160. You see that, Jenny?
Yeah.
Yeah, a little sneaky there. Plus current drawings equals what?
150.
150 minus current capital injection
30.
30. Okay. And that equals profits of 280. Now, this new equation called the business equation, you know you're gonna have to play with it a little bit. But it's again, once you get the hang of it, the change in net assets, current net assets, plus D, plus then it becomes like second nature. What is the other way to determine profit? Because see, that's another thing. Now that we have two ways, you can ask the question two ways.
Profit is sales minus expenses.
Sales minus expenses.
Revenue
What
minus
page did we see that?
expenses.
It wasn't too long ago. Like the previous page, I believe. Everybody see that? Was it the previous page? Page 14, maybe page 13. Yeah, the bottom of page 13. Do you see that? The bottom of page 13.
Yeah,
Sales minus cost of goods sold minus expenses equals the same 280. Alright? So be careful. The question can be asked in two different ways now. One using the normal profit equation and the other one using the business equation. And none of that changes anything with our old friend, the accounting equation. Okay, so be careful. Because after a while that information could look a little weird. Alright. Any questions so far? If not, then we can go on to some cousins. Payables and receivables. Remember those guys we talked about a little bit sometime before? Payables and receivables. Before we go into that stuff, first of all, what is a credit transaction?
A credit transaction,
Yeah.
it's, where we get the goods now and pay later.
We get the goods now and pay later. Can we have a credit transactions with a service?
Yeah.
You mean we can get a service now and pay later?
Yeah.
Yeah, and depending on if you have an account with that,
Do you have to have an account?
Yeah.
Not necessarily.
Or you have to.
Yeah, if you don't have one, they'll open one.
Open it, yeah.
The point is, whether it's a good or a service, you can certainly get the thing now and pay for it later. If somebody would pay some receivables they have for me, that would be nice. Folks are always happy to receive and promise to pay, but they're never happy to pay. Have you noticed that? When it's time to pay, we get finicky. We don't want the money to leave our hands, but we were happy to have it leave somebody else's hands. God knows I'll pay you before Friday. Doggone Friday come and go. Nothing. Another Friday come and go. Nothing. The receivable remains. Okay. All right. Having said that, then we can say that sales can have two characteristics in accounting or in business. One, you can sell for cash, and you can sell on
Credit.
credits. You can also purchase for
Yeah,
cash, and you can also purchase on.
credit.
Okay. I wonder if anything else needs to be said about that. Cash means now, credit means pay later. Pretty simple. All right, let's move right along then. Here we have the new kid on the block. Kendrick, can you go to page 16 and read those two paragraphs at the top for us? Please. Beginning with credit transactions.
With credit transactions, the point in time when a sale or purchase is recognized in the accounts of the business is not the same as the point in time when cash is eventually received or paid for the sale or purchase.
True or false? That's not a trick question.
It's true.
It's true. It's true. All right. The time that you record it in the books is not the time when you get the payment. When we make a credit transaction, we record it right away, don't we?
Yeah.
If you don't, you should be under the accrual method, which you'll talk about. You'll come into contact later. That's another thing. When it happens, you should record it. Doesn't matter when you get paid. You record when you get paid, then you make another transaction recording. That's how it works. Okay, keep going. Yeah.
There is a gap in time between the sale or purchase and the eventual cash settlement.
Now, folks, can I tell you that a lot of businesses suffer cash flow problems because of that gap?
Yeah.
And that's why you have to be careful how much credit you give Because if you give too much credit and the payments are not coming in fast enough, you will not have enough money to pay your bills. And if you don't have enough money to pay your bills, then you have to go to the bank for an overdraft. If the bank gives you an overdraft, they're going to charge you 18% per month. If your payments keep coming in slower and slower, your overdraft is going to what? Increase. And soon you will reach your overdraft limit. And when you reach your overdraft limit, what will your banker tell you? Sorry. Go and collect some of those. Yes, outstanding receivables. And then your nightmare really begins. Because all those people who were smiling when they left with your goods and services, they're not going to be friendly anymore. And they will watch you drown while they hold on to the money that they owe you. Yeah. It's a tough business sometimes. That same gap, same GAP that we talk about gently, but in practice, it's a nightmare. And in practice, many companies have gone down the drain because of that gap not working efficiently.
And when you're making enough deposits for your overdraft to fluctuate, then your bank is going to call you in.
Correct. And there are only two ways you can make those deposits regularly. Either by selling more and or collecting more receivables. So imagine if you have a huge receivable and a recession rolls around or things slow down. Then you can have a big problem. If you have a business. Especially if you have a small business. But it can happen to big companies too. Not only small businesses. Okay, keep going, Ken.
It is possible that something might happen during that time which results in the amount of cash eventually paid, if any, being different from the original value of the sale or purchase on the invoice. For companies, there is an international accounting standard, IAS 18 revenue, which sets out rules for when a sale is recognized. We look at international accounting standards in chapter 5.
See that? Things are getting warm. This is the gentle introduction. When we get into the IASs and all the rules and regulations, that will be another interesting scenario. Okay.
One of the rules is that the sale of goods is not recognized until the risks and rewards of ownership of the goods have been transferred to the customer. This ties in with what was discussed above, because the credit sales are recorded when the goods are delivered and an invoice has been issued, even if they have not been paid for. This is because the risks and rewards are with the customer when they have received the goods.
Indeed. The risks and the rewards are with the customer. That's an interesting concept for those of us who buy stuff on credit. We don't even think about it that way. We just say thank you and leave and hope we never get our credit card bills because we don't want to pay anything when the bill comes. Okay? But really, the risk and rewards are with the customer. What rewards are with the customer?
That they were able to get the goods without
That they were able to get the goods and services without paying at the moment. What are the risks with the customer?
that they still, even though they got it, they have to pay for it. Even though they didn't pay for it now, they have to pay sometime in the future.
Yes, they have to pay. Why is that a risk?
And who knows if they have the money to.
If they don't pay, there are
Yeah,
consequences
they have to go
generally.
to the court.
Okay, there are consequences. Okay, thank you, Ken. So then let's just harp on the point about paying, getting now and paying later. We all know what an accounts payable is now. It's an account that we owe money on. But for accounting purposes, we differentiate between two types of payables. There are many other types of payables. The two that we're focusing on now happens to be accounts payables where we owe for particular good or service, the company. And then there's another payable called what? Trade accounts payable. What payable is that? How does that arise?
Something that you incur during the course of trading operations.
Trading meaning what? What does trading mean?
Where you buy the stuff.
Buying and selling?
Selling.
Yeah. Trading, buying and selling of goods and services. Okay.
So accounts payable would be expenses like light and water.
Yes.
Yeah.
Yes. Or even simpler, accounts payable will be any payables other
You gotta
than
buy
trading
something,
payables.
yeah.
Yes.
You gotta buy a desk or something.
Correct.
for the office.
And any payable that you owe other than the trading payable would be accounts
Like if
payable.
you're in a food store and you purchase your goods from Delvina's, they give you a trade
Yes.
payable.
Yes. Okay. If you're a food store and you purchase stuff from Delbina's, there'll be a trading payable. Okay. If you owe BEC, that would be your.
Accounts payable,
If you owe BTC,
accounts payable,
water and sewage,
same thing.
and so on. Yeah. Okay. So wherever you get credit terms, for example, we consider those to be a payable situation. Somebody says you can pay in 30 days, 20 days. Usually when we talk about credit terms, we're talking about trade payables. Usually, where you have 30 days to pay, or 45 days to pay, or 15 days to pay, whatever. So credit terms are usually connected to trade payables, as opposed to accounts payable. Accounts payable generally become payable within 30 days. Trade payables can be far shorter than 30 days or far longer, depending on what the supplier gives you. Wow. Accounts receivable, on the other hand, is the opposite of payables. But we also have trade receivables, as we do trade payables. And we all know by now that accounts payable represents any amounts that are
Payable, you say, or receivable?
receivables.
Is,
Any amounts that are?
outstanding for you to collect.
Yeah, owing to you. Outstanding for collections. By the way, the adjustment center at Skillshare still moving
Not the entire
on the entire center?
portion.
Yeah. Have they decided which portion is going? Front office. What happens in front office? That's where all the collection calls are made? Yes, my foot.
The real stages of the, when they go on the hand. Like if you go late 7 days, 10 days, 30 days, I guess. But then it get older than that.
Wow.
Yeah.
So when a customer needs to come in now to discuss their account, what's going to happen?
They'll discuss it on the phone, I guess, and then they'll go to their branch.
The branch.
Or
You mean the
someone
branch
there,
does-
or the adjustment center, have someone there.
So they have a little gang there, a little small chunk of the group there, who people can come and see. Because you know, sometimes when customers are delinquent, the phone does not always work.
I guess they'll have someone to.
They may have to come in and see the customer.
Yeah.
Who will do field calls?
The people who left in the back office.
The back office will do it.
Yeah.
Okay. Yeah. Okay. Yeah. I just.
I was thinking to myself, I was like, well, you know, if they aim in, they 10 days, they go how much ever days, say 15 days. And you pay out Jamaican, Trinidad, Trinidad, you can call.
Because it's coming from the call center.
First, then they can send it down.
Or yours, oh, going to Trinidad, they go into
I think
Jamaica.
they'll.
You know, they.
What is our?
Processing.
Processing support.
You guys can't process anything?
We won't be processing most of the stuff that we process now, because that's going to Trinidad.
So what are you guys gonna do?
They have to find other positions.
Anyway, Johnny getting through, Johnny goes out
What
anyway.
about taking now?
The rest of them,
Yeah.
they gonna have to, the people that gets close to retirement after retire, take the package, or they'll find, something for them to do at Scotia.
They say they're gonna give them a couple of months to find people, I mean, yeah.
Just saying. But Trinidad is all the way down south. I mean, it's expensive down there.
No, they say the
Cheaper,
dollar
the
is
dollar
lower than
less.
us.
So we have to have our currency devalued to keep up your job, no?
Yeah.
No, but I mean, even though the dollar is lower, isn't when you
What about the big picture?
They streamline and process the things.
What is the bigger picture?
The bigger picture is even though the dollar's devalued down there, that's all the way down in hell
no,
somewhere.
that's not what I meant because
What's-
even in Jamaica it's $86 to a dollar, but when you calculate it, it's still you're still paying the same amount.
You have to pay the equivalent
You're still paying the
in
equivalent.
terms of international business.
I don't really understand how that works, but that seems to be the norm that they're moving it to. I don't know, maybe it's cheaper to do businesses to have
Somewhere.
businesses in those territories.
I guess the business license fees probably
Yeah,
ain't as
something.
much.
It has
Yeah,
to
but they
be.
still, the better they have
I guess
5,000 employees or
the
200 employees.
Bahamians kind do the work as well as the people down there.
You know that's madness.
Yeah, because I don't really understand moving it to a place with a lower currency because when you
And those countries are very volatile as well.
Yeah,
They don't have
But
the,
they pay their employees less.
to begin
Because
with.
somebody in Jamaica doing the same job as I'm doing isn't getting the
No,
same
there's no
salary.
doubt, there's no doubt. That's part of the
true.
problem.
Yeah.
Yeah, they, I
Okay.
think that's it. I think they
That's
say that
probably
the
it there.
Bahamians is getting paid a lot.
Yeah.
But I understand that Royal, for example, was it Royal? Was it Royal or Scotia that sold its Jamaicas off Jamaica? Royal. Because they had a Sangor or some other company in Jamaica that was competing with Royal, but I don't think it's because of competition. It's just that those bloody Jamaicans, they always advocate to nationalize. And they probably started saying stuff like, we want this. And if you don't give it, nationalize it. It would not have been the first time. It's just interesting that they would sell their royal operation. They're going to call it something else, but it's just interesting.
What, to the government down there? Or-
No, to
or-
a private company.
They said
That's
they was
just
operating at
private
a $60 million loss while right, they wasn't making no money in Jamaica, so that's why they have to sell.
I wonder why. They don't ever tell you the why. They just give you this number.
Yeah.
Now who's supposed to verify the hell that number?
Yes.
I wonder if we subject that to
Yes,
forensic
they do.
accounting, what we'll find. You send John down there. John said, Mama, what the hell's going on right now? Child don't spend up all the money in expenses. That's why he ain't making no money. Stop wasting it on lush dinners and private jets. Well, okay. I just threw that out because while we're learning the fundamentals, we have these reality situations. While we're talking about receivables, we know that they're moving the bank's receivables somewhere else, in part, somewhere. Then when Bahamians call, somebody from Jamaica is going to answer.
You know they get to extend, right?
Johnson calling. What the hell?
I would
They hang up the phone, wrong number.
More than some of them. Okay,
You
in some
know they-
cases.
That's who you call
Oh,
when
what the hell are
you're
you
doing
calling?
online banking, right?
Huh?
That's who you call when you're doing
Yeah.
online
Yeah.
banking. You call.
Yeah. Are you there?
But that's a different,
Yeah, but this saying, they can say that, why you calling me? Let a Bahamian call me.
Folks, anyhow. Okay.
Such is life.
Yes, I don't know if it's you guys, I'm told, I work in the commercial center at the Hilton, and I was calling Scotia downstairs. And when I called, Tom Jones answered. Say, hello? This is Michael calling, can I help you? I'm like, sure, you can put me on to the Bahamas. And maybe I dialed the wrong. He said, no, you got it. Who you want to talk to? Now I knew it was going. I was just being the devil's advocate. I said I'd like to speak with somebody from the Bahamas. Maybe I dialed the wrong number. He said, no, this is the calling center. Possible shop.
What do you need? And they always describe me so helpful.
Too helpful.
And they don't want transfer because
No,
want them.
they don't
do the
ever
work.
want to transfer
No.
They'll
Even
harass
calling
you to
from
try and
one
figure out.
branch, they are calling for next. I say, no, I need to speak with whoever. Hold on, please, let me transfer you. I get disconnect a couple times. So what I do, I send an email and say, please call me.
I don't even call no more. Send all that.
If I don't have your direct number, I send you an email, say, please call me.
Yeah, it's a strange situation as we discuss payables and receivables.
So what happened at the end of that call?
So he said, if you give my name, I'll get them for you. So I'm like, no thank you. I'll just walk downstairs and speak with them myself.
I know there's like, when they come that one, I know there's.
Not that I have anything personal against them, it's just that to me it seems a little absurd
Yeah.
that that should be the case. Okay? Nassau is so small, why can't we make our own connections?
Y'all call, when you try and call another Scotia branch, you get transferred, and you call.
Yes, to Jamaica, and they place the call back to Nassau.
Yeah. Yeah.
What nonsense
If
is
you don't know
that?
the person's direct number, yeah.
Okay? In a small country like ours, that's madness. I can see them doing that crap in Europe with things that are held somewhere. But how the hell I can call and says that Tommy
Yeah,
speaking?
I wonder,
Come on now.
who thought of that, you know, just that one, if one time to do it, the next one must do it too.
Because they collaborate. Just so they go to lunch to plan how they're gonna mess with you and other people. So Tom, what are you doing with those economic plantation workers you have? Because see, it's no more slavery now. It's economic slavery. So it's a more sophisticated form of slavery. And they're getting too many benefits already. The damn union. Maybe we need to do some union busting. Or whatever, I don't know. And whoever speaks up first, go first. See, what happened this time? She was just here. See, my Aunt Sam, they said to shut up and just take your place. Has anybody seen the movie 12 Years a Slave?
No, I heard
What are you
someone
guys
talk about
doing? You need to
it
see
was
it.
good.
See it
Is it
tonight.
out to the theater?
It's coming back. It was supposed to come back to the theater again. I don't know if it's back already. But if it's not, go and rent the video.
12 years of slavery.
12 Years a Slave. It's a true story.
Yeah, you're right.
Interesting.
She watched it anyway.
Alright. All that came out of receivables. Okay, so we have trade receivables and we have accounts receivables. We know that trade receivables are any receivables that has come out of trading, and accounts receivable will be anything else that is owed to us. That little chart at the bottom is a nice little chart to help you remember the process. Notice sales creates accounts receivable, which is an asset, which is finally settled in cash. Same thing with purchases, which is finally settled in cash. The time between sales and purchases to the time we receive the cash, there is a gap. How long does that gap last? Nobody knows. How long they're supposed to last? According to the agreement. But we know things will always go according to? That is sick. Doesn't always go according to plan. Oh my. Alright. This receivables and payables must be very important. Because when I look at page 17, that's a bunch of garbage there. Not garbage, but you know what I mean. A bunch of stuff to elaborate on how payables and receivables work. Did anybody read that?
I did.
I did.
You read all that?
Yeah.
Okay. Yeah. Hi, how you doing? Sure. Go right ahead. I'm happy to get out of here. All this crazy stuff we're talking about. Yeah, it's a lot of information to try to convince us of the importance of payables and receivables. In a nutshell, those of you who read it, what is that information all about?
It's just an example of,
They gave us some scenarios.
yeah.
Okay? And then we have to take those scenarios and put them in these boxes. And these boxes are really variations of this, isn't it? Is that true?
Yeah.
The boxes are variations of the accounting equation.
Yeah.
Alright. And remember also, the accounting equation, well, we haven't gotten there yet, but you'll see in a little while, if not now, next time. You'll see when we do the balance sheet, the primary components of the balance sheet are assets, boom, liabilities, and equity. Same as the accounting equation. So I think every time you see this, what you're really looking at is a balance sheet, aren't we? In one form or another. It's just an equation form there, but eventually it'll be converted to an actual balance sheet. All right, so let's draw.
And in here, balance sheet is called statement of financial position.
Yes. That's very important.
Now, virtually, I know balance sheet.
The balance sheet is called here the statement of financial position. The Americans tend to use balance sheet more. Not that they don't use statement of financial position, but you know, you'll find that the UK people do not use balance sheet. I wouldn't tell you they never use it, but very, very seldom. Why do you think the term balance sheet came up?
This is just the, put it in the balance.
Yeah, because it's always has to be
Balance.
balanced.
Yeah.
But statement of financial position has taken on a new character. Maybe we change it to statement of financial position for what reason? You think?
Showing more than just the balance.
Showing more, yes, than just the balance, but rather all of the components of the equation. And in some cases, comparing them to see how they increase and decrease from one period to another. So again, we can say that statement of financial position is a more accurate description than balance sheet. Tells us more. All right. Somebody then. So let's go down to solution then. That doesn't mean you shouldn't go back and read all the blah blah blah. But the reason why I'm jumping to the solution is because we have some information on top of each box, which pretty much explains a lot of the stuff that is in the narrative. Okay. There are a number of different transactions to deal with here. Okay, Johnny, why don't you read that for us? There are a number.
There are a number of different transactions to deal with here. This solution deals with them one at a time in chronological order, highlighting the numbers that change each time in normal type. In practice, it would be possible to do one set of calculations which combines the results of all the transactions, but we shall come to this shortcut method later.
For sure. Keep going.
The addition of Courtney's extra capital and cousin Gary's loan.
Now, in our narrative, what was the additional capital? Those who read the narrative. Right at the top. 200 bucks. And the capital, 400 bucks from cousin Tom Jones. Okay, keep going.
Cousin Gary's loan is for the long term, but he is not an owner of the business, even though he has made an investment of a loan to it.
True or false? Yeah, remember, he did not purchase an interest in the business. All he did was loan money to the business. Very important distinction. Okay? Very important. Okay.
He will only become an owner if Courtney offers him a partnership in the business, and he has not done so. To the business, cousin Gary is a long-term liability of the business. It is not business capital.
True or false? Are we clear on that? All right. Very, very important distinction. Okay. He is a liability to the business, but he is not an owner. All right. So the accounting equation after 200 plus 400, cash is put into the business, is as follows. Do you see the 200? Where is it?
It's under capital,
It's under capital, why?
because it's an injection.
It's an injection. Where's the 400?
It's in liabilities.
Because that's the money borrowed from
And
cousin.
then the 600 in assets and cash.
Why is the
To
600 in
offset it.
cash?
To offset.
When you say offset, what do you mean?
The debit portion of it.
Okay, so what is the journal entry for that transaction?
You credit $200 to capital.
Credit capital for 200? Okay.
Debit cash.
Debit cash? Okay.
For 200.
No.
200?
No.
You could just.
No, I mean, you could do the whole, the 2 and the 4, like how they have it.
So what do I do?
Do
Debit
cash,
cash for
debit
600.
cash 600.
Cash for 600,
And now the
And the
loan.
liability for 400.
accounts
Credit.
payable,
Yeah.
or I
No,
can,
that's a loan, that's not accounts payable.
accounts payable, a loan is not accounts payable?
I mean,
No,
accounts payable
that's
is short
a
term.
long term. Accounts payable short term, but in
Yeah,
a
and the
year.
loan is long term.
So later on in life, we'll see, since we know that an accounts payable is
But-
short term.
Also too, to be technical, according to what I read here, you would have to use a year's out of it to be
Yeah.
current. Yeah,
The
we ain't
current
that
portion
far
of the
yet.
loan.
We ain't that far yet.
Yes. So since we know it's not an accounts payable technically, is it a payable?
Yes, a loan
Yes,
payable.
it's a
yeah.
loan payable, okay. Is it a liability?
Yeah.
Okay. But we don't have to put liability here in our journal entry. Payable means liability, correct?
Yeah.
How much?
400.
400. Is this equation in balance?
Yes.
Just for information, this kind of journal entry is called a compound entry. Compound because it has more than 2 parts to it. You can actually have a journal entry with 3 parts, 4 parts, and God forbid, maybe even 6 parts, depending on the transaction. But once it has more than 2 parts, a debit and a credit line, then we call it a compound entry. Just like a compound sentence. All right. So we've accounted for the $200 and we've accounted for the $400, correct? Is our equation in balance still?
Yes.
All right, B? What happened in B?
The purchase of a bond
Is on
credit.
credit. So what do we do with the 550?
We're gonna debit the bond asset and credit payables, 550.
Payable. What kind of payable is that? A loan payable?
No, that'll be your,
He agrees. Pay for it after
What
30
it is,
days.
what
After 30 days. So what kind of payable is that?
that is a.
Accounts payable.
Accounts payable.
Accounts payable. Like trying to see what type of business he in, oh, we still in the market.
Yes,
So,
exactly
so,
right. Yeah.
Yes, accounts payable.
But that's what I want you to be thinking. What kind of business is he in? Where did I see that before? What happened before that? What is the situation? How is this connected? Because that's how accounting is. Everything is connected somewhere. And if you disconnect, then you have to reconnect. Otherwise, you're going to be floating around. All right. See what's happening there?
Sale of goods.
Sale of goods on credit for.
220.
And then what else happened?
The cost to the business being 250,
Cash.
cash paid. And then because he is paying later, it's shown as a receivable.
What does all that mean? Seems a little confusing, is it? Or it's not confusing at all? First of all, sold goods for $320 on credit. On credit means what? If you sell
What
goods on,
happened is, he sold it to him before on credit, but now he is, the business is collecting it from him now.
No.
That's not it. He paid $250 cash out of his money for it. So they're taking that out of cash.
Remember, whenever we sell anything, it is composed of 2 parts. One is the selling price and one is the cost of goods. So in this case, the selling price is how much? $320.
320.
And the cost of goods?
250.
$250. The difference is normally represented by
Profit.
profit, or what we call markup. Alright, so let's see how we handle that transaction. Where did the $320 go?
Receivables.
Receivables, because
He hasn't paid.
he sold it on credit.
Yeah.
How do we know he sold it on credit? Because they said so. What happened to $250?
It comes out of cash.
You mean, because it says the cost to the business being $250, why would they even say it like that and say cash paid? Why would they do that?
Where did they say cash paid?
It says the cost of the business being $250 and then in bracket cash paid.
That means paid in
He
cash.
paid, right,
In
at this
cash.
time, he paid the $250 to
No.
the business.
No,
Courtney paid $250 for the goods.
in cash.
In cash. For it, he got the goods for $250. He bought.
That's
it for
just the way
$250.
they say a little weird, but they mean
Right.
paid in cash.
Right.
He
They
paid
paid-
$250 in cash for the goods.
Right.
That's really what it means.
The uncle hasn't paid it yet.
Do you see that, man?
So why would they even make up a transaction like that?
Because he could have paid and he could have done it on credit. He didn't have
No,
to
but
pay in
I
cash.
mean, we worry about him selling the goods to his uncle. We didn't worry about when we bought it, because we would have bought that before this
No.
happened.
Not
If you-
necessarily.
If the example says, when you read it, that his uncle asked him to purchase some stuff for him. So
Yes.
he went out and he purchased those stuff for the $250 and then he charged him.
Yeah, in the narrative,
It's in-
you'll see that it's in the present and they occurred together. His uncle says, go and do it. He might have paid $250 in cash and then he sells them on credit for $320. Was that a good decision?
Yeah, because
He made $70 to me.
Was it a good decision to sell it on credit?
no, because you don't know if you could get them.
Why do you think he sold all of that on credit considering the size of his business?
Because right there, she was 17.
Who did he sell it on credit to?
He
His
had other
uncle.
options.
Did he sell it to his uncle on credit?
Let me see.
That's the problem.
And if he,
Yeah, that's
he obviously because of his uncle, he felt confident that he'll be paid. But
That's
we know
what
in
we
real
want
terms,
to be.
that may not be true. Because family has a tendency not to pay.
So his uncle say, okay, go look for me for some, go look for some curry, for me, curry the seasoning, right? Just say for example, because he having a body or whatever.
Right?
So his nephew say, okay, I'll get it for you. I'll look for someone to buy it from. And I'll sell it, and then I'll sell it to you. That's how he say it.
Pretty
He
much.
sold it for more than what he bought it for.
Yeah.
Right.
He bought it for $250 in cash, sold it for $320 on credit. That means he's out of cash $250 and waiting to get the $320, which includes the what? $250.
Yeah,
Risky business. But that's Uncle Tingham.
yeah.
Uncle who?
There.
Yeah.
Uncle Viv. Last Viv I heard was Aunt Viv. And the Fresh Prince. Okay, Uncle Viv. Alright. So the 550, sorry, the 320 is sitting down as a receivable, hoping to come in. Where's the 250?
It comes in cash.
It came out of cash. So we have two debits now. Don't we? We debited cash for how much? 250? Did we debit cash?
Credit cash.
We credit cash, why?
Because that's, we had to take it out.
For what reason?
Because we had to pay the
Purchase the goods.
supplier. We had to purchase the
And
goods.
whenever we pay out, we credit?
Cash.
Yeah.
Okay, same rule as last time. What do we debit?
Because the decreased cash, you have to place a credit into it.
Of course.
Yeah.
Speaking about decreasing cash, what's the normal balance for an asset?
Debit.
Liability,
Credit.
equity,
Credit.
revenue,
Credit.
Credit.
expense,
Debit.
drawings,
Debit.
okay? Alright. Okie dokie. Remember all that old crap still applies, and it'll apply until you go to wherever you go in accounting. And long after you finish your academic work. It still applies, even in the real world, believe it or not. What do we debit?
We debit accounts receivable,
Accounts receivable for how much?
320.
320. So you can see, there aren't any journal entries on this paper, but I'm deliberately injecting journal entries now. So by the time you get to journal entries later, you'll say, oh, man, that's a piece of cake. I should have brought me a tart to eat while we're doing this. By the way, if you want to bring food to eat, feel free. If you want to bring donuts to eat, bring the donuts. Even if you want to bring a glass of wine, you just have to sip it slow. Like, kid. Do you drink, Kendra? No. Anybody in here drink wine? No one. Oh, Maris. Yeah, so if you need like a little, you have to be a small glass, and you have to sip it slow.
I can't bring that in here because I'll fall asleep.
Oh. That means you're not one of those drinkers. You only a now and then.
Yeah.
Like me, even if you pass it across my nose, I'd be like, damn, I need to go. I haven't drink anything yet. When I graduated from undergrad school, I said, I'm going to have a full bottle of wine and see how it feels to be dizzy. For once in my life, I didn't do it. So when I went to grad school, I said, okay, damn it, I'm tired and broke again. I'm going to do it this time. I didn't do it. I still need to do it. I haven't done it yet.
You don't trade your slogans, huh?
No. I've never drank a beer in my entire life.
Stop talking foolishness.
I know it's weird as hell. Sometimes I wonder even about that. I've never drank a stout in my life.
What is in there for you to want to drink it? There is.
Apparently it's a lot because people drink it all the time. Two, three Heineken, five Heineken. I don't get it.
Wine, you don't drink no alcohol?
No, now, occasionally, if I go to a wedding or something, I'll drink a little bit of wine, like red wine like that. And when I do that, I'm like totally like, yeah. And that's like every blue moon. Seriously, that's like every other couple years or something. I don't even have wine home. You know, like how people have wine home and nobody's looking there. I haven't gotten to that yet even. I don't know, it stinks. I need to do something once.
When your son graduates, the last one.
No, don't even wait. Just,
I was supposed to do it. My son graduated in December. I still didn't do it.
Just Friday after work. Just whatever the nearest bar to your boy, right across the street. I hear what it is, Bristol Celestine. I'm like a store.
Kiss my foot, imagine
No
wine.
more better than answer for beer.
People look at me shocked. What the hell is this?
Let Maris bring it to you.
Yeah, I should sneak it over to the commercial set. And I can go to one of the floors in between, the escape floor, drink it quick, and go back to work drunk.
No,
For one drink. This is what I'm feeling. Yeah, maybe when my baby graduates, I'll do it then. I'll see.
If not then, when you're on the day you retire.
For my retirement, that might be a good time.
Yes.
Yes. Sneak a whole case of wine somewhere and just hide and drink all.
No, you gotta start gradually.
Come on.
Yeah, and just lay right there and sleep it off for 3 days. That's interesting.
My wife would be like, what is wrong with you?
But do not disturb side. Oh man. Okay, so accounts receivable is debited for 320, cash is credited for 250, but this journal entry, this compound journal entry is not balancing. What else do we need to do?
We need
$70.
We need $70 from where?
Credit cash.
No,
Credit capital, sorry.
Credit capital.
Yeah.
Yeah, Uncle Bill.
I see the C's.
Credit capital for how much?
70.
$70. Does anybody know why we credit capital?
Because that's the profit we intend to make. So
Yes.
Straight to the bottom line.
That's interesting. She should say intend to make. Are we intending to make it, or have we already made it?
You're intending to make it because he hasn't paid me yet.
But under the accrual method of accounting, it doesn't matter. We still made it, but we just haven't gotten the money yet.
That's it. Yeah.
For accounting purposes, we made the profit when we did this. But because we didn't get the money, accounting doesn't recognize that. The accrual method does not recognize that we haven't gotten the money yet. All accounting recognize. What the hell is that?
That's a B.
Just when I need a bloody bee to bite. Wait a minute, BBB. I didn't realize that. A bloody bee to bite. Ruin my evening. Okay? So yeah. So this 70 represents profit already earned on this sale on account. Now, it is possible that even though we've accounted, and this is something that might happen under VAT. For example, you have a transaction where a company sells goods on credit. They have to pay the VAT on the invoice, but they haven't gotten any money. And if they don't get paid for a long time, then the government will have money that they're not getting back for a while. If ever.
That means that they need to start working on those receivables.
What is it? And we know how receivables go. All I'm saying
So
is
then a lot of people probably won't be giving
credit.
credit.
Exactly. And when people don't get credit, then business activity will what? Start to shrink.
Yeah.
That's like,
Because if I have to pay you right up front, I go to the States anyway.
yeah.
That's the nether thing.
If I have to pay you.
And that's to go right to the state.
Yeah, and I can get it.
That's the nether thing. Well, that's going to continue to happen anyway. The other problem is those of us who are stuck here, who can't do the states thing. Remember, only a certain gang of Bahamians can do the states thing. Some of the rest of us are stuck. Sort of. And so, and we can't do everything with the states. We're going to need like on occasion. And we still have to live every day.
Yeah.
The problem is those suppliers who are selling goods on credit, they're going to stop selling goods on credit because they have to pay the government and pay for you.
The
So
average person don't purchase on credit.
a lot of people purchase on credit on the trading end.
Yeah, that's what I mean, but the average.
No,
Like
well,
the individuals, the consumer.
well,
They use the credit card.
But
Yeah, but they
like
pay
some
some cash.
services, like, I guess.
well, we're still waiting to see what services
Know
will
the person,
attract
yeah.
that.
You know what I mean? Tell you what they pay later, but most are not.
They say, but Telco and all of them getting their back on it also.
Sure,
Yeah,
it's prepaid.
so
They're trying to figure out now. They're trying to figure out now whether they should put the 15% on the front end or the back end of the prepaid cards. So yeah, so in other words, when you go for a top up, should we put the top up at the time, add it in then, or should we just add it in on the other side somehow? And they said that's going to cost over $1 million for them to put that in place, just to facilitate the prepaid
And the machines,
payments.
yeah.
That's not any of the other crap yet. Well,
That's just like.
I'll say this. It's going to be very interesting post July 1.
You think they gonna have everything in place
No.
before July?
No way.
I mean, by July 1?
No.
The government or.
What we're going to do, what governments tend to do, we're going to do something, start collecting crap, put money in the treasury, and fix things as we go. Whoever gets drowned along the way, good riddance. Carry your tail. Unfortunately. Nobody knows still why VAT has to be done this year. Why can't it be until next year? There are no answers to that.
Because the government probably don't have no money.
They have
probably
had
pay
money
them.
for the last
They probably
30,
have.
40 years,
They
almost.
probably have to pay a loan, like.
No, that's not the
a
reason.
certain
So
time.
then they should have been working aggressively.
Prior.
To collect the money that they have outstanding.
That's what I mean,
for
prior.
taxes.
Let me just say it again. We
Oh,
have,
and they have to do it because they have to reduce the customs duties by this year.
what or else what?
They
No.
cannot be on some trade thing.
And then what will happen?
It's
Embargo or some international.
And if we are not on that this year, what happens to us this
They
year?
must be gonna be on it, I don't know, they must be,
I mean,
they must
it's
have
just like that
benefits.
blacklisting thing when they
Yeah.
made all of those laws. What year was that?
But we don't really know 2000.
2000.
2000. But we really don't know what the consequences are. Do we? All we hear is W something. We have to do something. We need to do it now. We don't really know what's going on. When was the last time somebody made a national address to update the Bahamian public on what's really going on? What are the details of VAT, WTO, and why we must do it immediately? Maybe I missed it. Maybe I didn't get the email.
They probably owe them too much money.
See, everything is, we don't know. My question is, why don't we know?
Top secret.
Why?
Okay.
Does anybody ask?
Sure.
Everybody. What did
I
they
mean,
What did they say?
People ask all the time.
yes, but it's
Nobody answers.
But I know like every so often there's seminars on it.
On what?
On the implementation.
VAT is only the seminars are only for the implementation of VAT. Nobody knows why it has to be done immediately.
Right.
Nobody knows why we got up a few months ago and this VAT was hanging over us like a dome of gloom. How come?
Right after the referendum, and y'all say y'all don't want the number of houses, they say, but since y'all don't, and it seems so spiteful, but since y'all said no, y'all don't want the number of houses, bam, y'all take back. That was right after
But
that.
they should have they should have never asked that question
the way they
because they asked that question that
Deceitfully.
That was
they
kind of.
And then acted spitefully.
And now John and the news yesterday say about we need to legalize the gambling.
Now all of
houses.
them all over the
All
radio
of a
saying,
sudden
oh
now.
yeah, we need to legalize it, and they should have legalized it, and they should have had
Telling
the
them why to
referendum.
do it, so encouraging the people to
So-
understand why it's necessary to legalize it.
All of that to get around to legalizing it then.
Yeah. And then hopefully they'll say, okay, so if y'all allow us to legalize it without too much drama,
Then we can
we would
reduce it
introduce
from
back-
the 15,
Yeah.
we can introduce it to the 7 to the 10%.
yeah.
That's what they can do.
Wow.
Whereas they wasted $1 billion, and they could have had that money in the treasury.
To pay down.
But the pun said they saw-
$5 billion.
The pun said they saw the Deputy Prime Minister boogieing down at the Money House party the other day. Is that true? Funkin' like dancing like that. Yeah.
They say one of the number boys bought it for $300,000.
Where there's smoke,
Well, who, Deputy Prime Minister?
No,
Todd?
bought in a car.
In a
They bought
car.
it in a car themselves, $300,000. Did you hear that?
what we really need to do is we need to close down the number houses, open up a government-sponsored lottery
Yeah.
so that all the monies go to the state and not a handful of persons, whoever they might be.
Yeah.
Because once that is legalized, then all kinds of people will be opening it up everywhere. People who have money can buy shares, and the rich will get richer, and the poor who are gambling will get poorer.
And the thing is, all of those families connected. All of
Yes,
them that own those number houses, all of them connected.
yes, by
Marriage or
by no
something,
accident.
but all of them connected somehow.
Okay? And soon, legitimate people who want to get in will not be able to get in. It'll almost be like a mafia operation, where only persons who they sanction.
They say it's like that now. And
Yes,
they,
like
they
that.
heard they bought some FBI agents over here. The news reported that some FBI
That's my point,
agents
folks.
was over here investigating emails.
Sooner or later, and see, because of the nature of the business, money laundering can then kick in again. It'd be like a casino thing. Who's going to know what is legitimate gambling money? Who's going to know what is legitimate money from drug dealing and prostitution and arms dealing and all this stuff? And who are the dealers? And what are their affiliations to all the persons? Wow. Wow. Mind you, I don't really have to teach, I guess. I could pull deals. But pulling deals for a bunch of money means that one day I might and will be caught. My reputation destroyed. My children cannot raise their heads anymore. They find my carcass burned somewhere. This is what happens when you have all of these weird things going on. How do we get to that? Food for thought. I don't know if that's a debit or credit. We'll soon find out what's going on eventually, I guess. Oh my goodness. Okay, D. What's happening in D?
After the purchase of goods for the $550 paid in cash and $100 on purchases on credit. We have
So $550 paid in cash for the purchase of goods and $100 on credit. Where did the $500 go?
$550 went to cash.
Sorry, the $550, where did that go?
it went to purchase.
The 550 went to goods. The
Goods?
550 came from cash and went to the goods.
Went to goods.
And then
Goods?
yes,
Yeah,
goods.
Yeah, called goods, like, that's
It's
like
all good.
inventory.
Okay.
Yeah.
And where did the $100 go?
The 100 came from. It went to goods and it went to payables.
Yeah,
Like,
that's
but
what
it
we
was
spoke
payable,
because
payable.
$100
You made $550
Yeah,
and $100 went to goods?
Yes.
How come?
Because
Because-
all of that was
Because one
stock
was paid
purchase.
for credit and one was purchased with $550 cash and one was purchased, the $100 was purchased on credit.
What is the common denominator?
Inventory.
Purchase inventory.
They're all
Purchase,
goods.
yeah. yeah.
Crack cash to credit, they're all goods,
Yeah.
totaling $650.
Yeah.
$550 went to?
Just
Goods?
cash.
100 went to goods. And where did the other 100 go?
Payables.
Payables.
Yeah.
On credit. Can somebody give me that journal entry? Now that we're experts almost.
You would, debit inventory, $650.
Debit goods for $650.
Yeah.
Okay.
Credit cash for $550.
Cash for $550.
Yeah, because we paid $550 in cash.
Okay.
And credit, accounts payable, $100.
Okay. I want you guys to know that by the time you're done with this particular course and the other one, if they downsize any further, Scotiabank, you will be capable of working elsewhere.
I come by hello often. Every often.
Yeah, just talk to Sam. Sounds I need help
Yeah,
anyhow.
like an accent.
I mean, they hire people. You move into a big office, so
Yeah.
and VAT come in, so
Oh yeah. So there'll be meetings,
Active
folks, to crunch some numbers. Do stuff, all kind of crap.
Since I've got a husband talking.
Yeah, we gotta go to the court, right?
Cause so while you're learning all this crap, you figure, man, I don't need that foolishness. I'm not wasting my time anyway. But life is full of ironies you never bloody know. Alright. More statements from Scotia?
No, because on Love 97 News and the Bahama Journal, they were saying that Scotia was closing Harborough Branch.
So I heard.
Village. But
Is that true?
That isn't true. They sent out a statement today to say it wasn't true, that they are not closing any branches in 2014.
When are they closing
It
up?
says in 2014.
That means next year they're gone.
When I read that, because you probably already left the office by the time that came out.
It's a slick move. None in 2014.
And he said the same, he was very specific. He
That's
said,
it.
they said that we have no plan to close any branches this year. So
Who said that? Oh, damn.
She's still there.
Let me give you-
Let me get there.
no one's there. They're recording us.
They're recording us. So it's not the best for that one. Thank you, Mr. Tingham.
Oh, so she got the tape instead.
Yeah. So they say 214, then doggone, that means next year, crap going down. And so that's a technicality.
We're not closing any branches.
We're not
It didn't
closing
say,
any branches.
it didn't say, it just said in 2014.
Yes.
At the end, said that.
So next year while we're screaming, it says, we said none in 2014. But this is now 2015, ladies and gentlemen. And
Time for change again.
wow. And I could see that happening with this particular branch because the main branch is where?
Yeah.
Right there.
Yeah. And then we have one right up there. Right up
Yeah.
the road after.
Okay. So, time for a change. That sounds like back in ping time. Wow. All right. D, E. What's happening in E? Anybody?
Indeed.
E.
E.
Well, why don't we have... Jillian, can you read E while Scotiabank discuss their fate?
You know that's going to do.
I know. Okay, Joe, can you read that little piece in there so we can see what happened there?
For the third market day running on September 17th, the company sells all its goods, earning $1,050, all in cash.
Now you know this is a pipe, well, I shouldn't say it's a pipe dream, it's doable. Okay, so long.
He decides to take out drawings of $200 for his week's work. He also pays Sheila $50 in cash. He decides to make the interest payment to his cousin Gary the next time he sees him.
All right, and so the profit, blah, blah, blah. Well, any question on that? We've seen this before. We've seen those expenses before. Cost of goods, $650. They told us that was the cost. He paid wages, he paid interest payments. Anything else unique? What is that 70 doing there again? Where'd that come from?
That's the profit he made. The $70, the same $70 would be to put in capital.
The same 70 that is sitting in capital earlier. We add that to the 317, 347. Why?
Because we now, did we collect it?
Doesn't matter, we collected it, remember?
Yeah, we added because interest earned on September 17th and now profits on sale of goods. We added to it
Why?
because let's see what it is.
Because
Because I guess the 347 is profits.
the 70 bucks.
It costs $250.
Yeah, that's from the previous transaction. So theoretically, we had two different transactions going on. The one where he sold all his goods that he did with his normal customers, and then the transaction that he made with Uncle John Jones. Viv,
Where do they take it was $200? Where do they take it from?
what 200?
The drawings. Where does that come up? In this. Oh, it doesn't come out there.
Where did it come up?
It came out from the garage.
Earlier.
No, it's another 200 is supposed to come out. After the market, after everything happened.
Where is that 200?
Right, that's what I'm asking. It isn't shown in this.
But all we doing now is,
drawing
all we doing is seeing if he made a profit for the week or loss, you know. This only.
That's a good point. Why is the 200 not shown at this point?
Because that's capital.
Because that impacts capital. So that,
So it's just like the statement.
all we're
of profit
doing
and
here,
loss.
yeah, this is a statement of profit and loss. Okay? The key point here is the 70 is added into the original profit because the 70 is from that earlier transaction, plus the 347 from the last transaction he made of the 1,050 where he sold everything, paid off stuff. Okay? But that 200, that should show up somewhere eventually, impacting what account?
Cash and the
Capital,
drawings.
yeah.
Cash and capital. Well, let's see. Let's roll over to the
And so
next page.
Because we treated the $70 different earlier, we had to treat that as profit, yeah, because we treated it as profit last time.
It was profit last time on a separate transaction.
Yeah, so we have, and now
So we
we
added in.
collected the cash. But that wouldn't be like double.
No,
No.
they only doing that for, I guess, teaching
Just
purposes.
for you to
because
see.
normally.
You wouldn't see it like
You
that.
wouldn't see it like
You
that.
wouldn't see
Both
gold
would be
like
meeting.
it being out.
No.
Right, you wouldn't see that.
It'll all be a sales
That
transaction.
417
Yeah.
would be.
Yeah, just 417 with all that crap in it.
Yeah, okay.
Yeah, they just kind of, take you around the mulberry bush on purpose, so that whenever you run in that bush again in the future, you'll know you're around the mulberry bush. And also to acquaint you with the fact that profit can occur out in isolated or different transactions. But at the end of the day, we clean it all up and it's shown as just a whole bunch of stuff with a net position. Alright, so then if we go to page 19 and look at our accounting equation, look under assets. You see where the 200 bucks is? The drawings?
Okay, it comes out of cash.
Yeah, it came out of cash. Where did it go?
Drawing.
It went to drawings.
went to drawings, which reduces capital. Everybody see that? We took out the $200 in cash, we debited the drawings account, which reduces capital, that's why we have the brackets, and everything else we're familiar with. Where did that additional capital of $200 come from under capital?
That's the capital gain.
That's what the.
She invested that at some point. Does anybody remember when?
At the beginning.
When he, at the
That
beginning,
was
way
in the
back.
starting period. Beginning of the starting period.
Yeah, back.
We had that 7.4, say he invested immediately a further 200.
Yes, yes, yes. Because sometimes you get so busy with other stuff. Where the hell did that come from? All right. So our accounting equation again is in balance. By the way, what is that $3 hanging out there in right field?
That's the
That's the
interest that he had
interest.
to pay for the loan.
But isn't that an expense?
No, that's still a liability
That's
because
a
he hasn't
liability.
paid it yet.
It's still a liability because he still owes it. Remember
Not paid yet,
the
it's not
narrative
paid
said,
yet.
yeah, he will pay it somewhere. Now, what point am I getting at with accounting as well? It is much more than just numbers. The language is what it's all about later on. For the moment, we're learning mechanics. And I'm talking a lot about language because I'm indirectly acquainting you with the importance of the language of accounting. Okay? Because if you don't read the language carefully, you're going to come up with the wrong transaction, the wrong journal entry, the wrong debits and credits. Okay? Because see, this $3, if they had said he paid $3, then we wouldn't have a liability, would we?
No.
No. The only reason why we have a liability is because they said he will pay it some other time. Interesting. Does anybody understand what happened right under that equation? 1637, 1220, increase in assets of 417. What happened there?
They trying to
Net
find the
assets.
different, I mean,
Like
the
the-
net assets for
The
the week.
The
profit,
change in net assets?
the profit.
No, but it gives us the profit figure, but what we're trying to find is the increase in net assets. It just happens to be the profit of figure.
Yeah.
How do we find the increase in net assets?
By taking the
We
net
add-
assets for the 7 from the 10.
From the previous period, yes,
And this coming from the assets from the current period.
and taking the assets from the,
Current period.
Where did they find 1,053 from the previous period?
yeah, where did that 1,053 come
No,
from?
that's liabilities. 1,053 liabilities.
Oh, yeah, that's liabilities.
Interesting. So we take the 1,053 from the
Yeah,
2690,
That's
Net
assets.
assets, that's.
is it liabilities or assets?
That's
The 1053,
That's
That's
liabilities,
liabilities.
which we take away from the 2690.
which is the assets.
Because they're trying to find the net assets.
So we're looking at net assets at the end of September, sorry, 17th of September, that's today or previous?
That's today.
Today. And then we have this 1220 from the 10. How did we come up with 1220?
The net assets.
That was a net asset.
September 10, that was the net from the past.
So we have already taken the liabilities out of that previously to come up with 1220?
Most likely.
Yes.
Yeah, I guess they did.
Most likely, yeah. They're trying to
Oh,
see if
there
people
weren't
are
any
found.
liabilities
Yeah, for that
then.
period.
There weren't any liabilities then.
Yeah.
So
There were no liabilities then, no. Okay. So,
Yeah, 1 to 2.
yeah, if there's anybody trick you, let me trick you during the term. So when you go into the exam, they can't yank you. Hopefully. Is zero an amount?
Two guys in, sorry to this.
No, let it rip.
But two guys in the, I was waiting to get my tire changed one day. And there was this guy, and you know, you describe people as looking as a rum blossom. That's
Yeah.
how we did look.
What was the rum block again?
A rum blossom.
Blossom. That is somebody who,
Drinks a lot of
okay,
alcohol.
wrong blossom.
I never heard of that phrase.
And he was doing his best to explain to the other guys in the tire shop that zero has a value. And I mean, he was, you can't have a number without zero. Like, how do you get a million? Zero has a value. And
It
I'm
does.
like, I was in shock to see somebody at that level
Discussing it.
discussing something. I mean, so
Yeah,
That is
kind of
profound.
an intricate
That is be
subject.
the smart ones who
That's
go by the
because,
wayside.
that's because alcohol and drugs do not discriminate. Doesn't
Right.
matter who you
No.
are. Once you get caught, you are caught. No matter what your profession is, how trained or brilliant you are, or how dumb and silly we might
I
be.
always brother call my next time for drugs, and he'd be like, if I call him now, he'll be like, Marius, how much is 5,000 plus whatever, whatever.
Yeah, you just right on his
And
head.
I don't do it right off. He'd be like, I smart than you, can say it before whatever, you know. He'll be
Yeah.
like, because he is a math whiz, right?
Sure.
I'd be like, anyway. You think I got time to figure out how much is whatever?
Yes, time.
He said, because your his calculators too much nowadays.
Yeah. True, yeah, this is the point is, drugs and alcohol do not discriminate. That's the problem. So it doesn't matter how brilliant we are, otherwise, if we get stuck with that, we're stuck. Until we get unstuck, if we ever get unstuck.
Now your views on the zero have value.
Zero? Zero? Yes. Not only does it have value, but it is a number. It is a digit, like every other digit. Okay? It just is a zero value. Nothing. So we have a number for liabilities. We have an amount for liabilities. The amount was zero. Because if we don't call it zero, what the hell are we gonna call it? Nothing? You can't write nothing down. Zero. Okay. Very important digit. See, that's my point. Very important digit. It makes up numbers and it implies an amount.
I just have a quick question, right? Net assets, right? That's the difference between our assets that would be owed.
Assets.
And it would be owned
Right?
minus would be owed for them.
It would be owed.
Asset.
Yes.
Yeah, it's a net asset.
Yes. The difference between total assets minus total liabilities
Okay.
equals net assets. Let's do that
And
formula
then this
again.
I is, in
I, you mean this
profit
one?
thing, in this profit equation.
We're gonna do it again.
The increase or decrease in the net assets in current period, okay.
Okay. So let's do the business equation again for our new position. Okay? Profit equals I plus D plus C. So let's do I first. What is I in our example now?
417,
What is that represented by?
the increase or slash decrease in net asset for the current period.
Which we calculated earlier to be
17.
17. Previous minus current equals. Plus D,
Which is the drawings.
which is equal to
200
200 minus C.
minus,
How much was C?
that's capital, right? Capital
C
they
is
said is 200.
200.
Oh, that additional capital
Oh yeah.
that happened during this period.
Uh-huh.
Yes, during this period. Because we opened up with 1,220 because we could use that. What about the profit on sale to Uncle?
What about it?
The 70. But we already gave him the account for that earlier though.
Yes.
That included in the 417 already.
Uh-huh.
Yeah. So we can only use that 200. Okay.
So this equals, profit is equal to
417.
417. So now you have two ways that we can determine profit if necessary. The old-fashioned conventional way, and now the business equation method. Either way will give us the profit position. All right. Sam, can you read that question real quick before we move on?
Lisa Doolittle has 2,500 invested in her business.
Okay?
Of this, only 1,750 has been provided by herself.
Where did the rest come from?
The balance being provided by a loan of 750 from Professor Higgins.
Okay.
What are the implications for the accounting equation?
And the hint?
The answer is not necessarily clear cut. There are different ways of looking at the professor's investment.
Kiss my foot. So, if we just look at the 2,500 invested in a business by the professor, we could come up 750 being from professor and 1,750 from whom? Who's putting in the 1,750?
Lisa.
Can we do a journal entry without looking at anything else yet?
Yeah.
For that transaction, what would we do?
Cash.
What about cash?
2,500.
What about it?
Debit.
Oh, debit. Sorry. For how much?
2,500.
Okay, and?
1,750 to capital. Credit.
Debit or credit?
Credit.
Credit capital, for how much?
1,750.
Okay.
And then liabilities, 750.
She borrowed the 750?
Yes.
Yeah, if we look at it from that
That is
way.
a loan.
Okay,
That's a
so,
loan.
Yeah, so.
okay. Accounts payable, loan. Or loan payable. Alright. So that's our own little thing we came up with. Let's see what they came up with. They said it's a tricky thing. This is not a clear-cut situation. They have all kind of points, 1, 2, 3, and 4. All that out of one statement. How the hell did that happen? Well, let's have a look. We have assets of 2,500 in cash, balanced by liabilities of 2,500. Is that true?
For the business, yeah, you could say it.
What does that mean?
Because you owe, even though the Lisa injected the capital, the business owed that to her, the 1,750. Plus we owe the remainder to the professor. So from a
Yes.
business perspective,
That is exactly how we look at it. Assets equal 2,500, liabilities equal 2,500. The liability side is this. Capital plus payables, they are
Yeah.
both liabilities.
Because they tell
Okay? The business owes her this, professor owes her, or she owes the professor, sorry,
yeah.
the 750. So you have two liabilities on the credit side. Wow, that's interesting. The 1,750 owed to Lisa clearly falls into what? The special category of liability labeled capital. So they go on to explain it. And the 750, of course, is our typical liability that is owed to the professor. What about point 3? It's a bunch of crap out of one statement.
Yeah, because if they saying that if they went into partnership, then it would be just capital.
Well, if they were in a partnership, then the 750 would no longer be a liability. Because the professor would be a what? Partner or part owner. But that's not the case. He only loaned the money. He's not a partner. He's not an owner of any kind. He has no equity in the company. And therefore, it is only a loan. What about the last point? Well, we made the last point and third point.
Yeah, we made it there.
Any question on that, folks? Anybody? Another important concept.
I guess you have to read between the lines to see what exactly it is.
Yeah, they
You
didn't
have
give
to
us
look
that
out for
information, so.
it. Yeah.
we
you
Yeah.
have to.
But did we answer the explanation when we did this initial journal entry? Yes.
Yeah.
By doing this, by implication, we made it clear that we understood all the other points. But it still doesn't hurt to look at the other points to see how they made the connection. In terms of this being a liability and this being a liability, and there's a difference between a liability and ownership and so on. Very important concepts. That's what it's all about. getting those things down pat in our souls. So when we kick into chapter 2, 3, 4, 5, 6, and all that stuff, you'll be like, what the hell again? What is capital and liability? Oh man, let me go back to chapter 1. Alright. The last page in this chapter, before we go on to 2, is probably the easiest page. The hell? It's probably the easiest page of all. Hello? Hi. Market Street. Okay. So nice how the son was old enough to drive. I don't have to drive everywhere anymore. When we travel, I don't have to pick up any more bags. Even my baby can pick up his own bag. I remember back in the day when they were growing up. And we travel, everybody, my wife, one bag, I'm buying. The other one, like this.
That's how you ready.
Yeah, I have all like 3 bags here, 7 on this side. One with the children holding it on me, and the other one has a hand. And
Unless you're still trying to lift one.
absolutely, you know the deal.
You're still trying to lift one of them.
Trust me on that. And then they, daddy, I want daddy, lift me, daddy. So I have one holding on one like my arm and 17 bags. Now when we travel, I just grab my own bag. And if I feel froggy, I just tell one of them, Dante, grab that too. Doggone it. Feels like heaven now. Never thought I'd see the day.
Worth the wait.
Yes, it was. On the weekend I had crap to do, my son volunteered to drive, little Sam. So I was able to put on my short pants, slippers even, doggone, leave my phone home, wallet home.
Your youngest son driving too?
He's learning.
Okay.
Well, I mean, the older one was able to drive me all around, my leg crossed. I said, man, I can get used to this crap. Finally, after all those years, 20 years of work, blood, sweat, and tears, that's it. Okay, so this is probably the easiest of all we've done so far. The dual entry, the double entry bookkeeping process. Because we all know that for every debit, there must be a corresponding credit. Absolutely. We know that the accounting equation is simply plus capital. We know the business equation is simply
Profit equals, MEP equals I.
I'm sneaking stuff in. Profit equals I plus D plus C.
Yeah.
No,
And then-
we
But
can't
we need
say
to
it like
say
that
the
'cause
whole
I ain't
thing, we have to
remember
say
what I
profit
was.
equals
Oh.
increase/decrease in net assets for current period, plus current minus capital,
For current period.
for current period.
Everything is for the current
Everything is
period.
for the
Current period.
Yeah. So I means increase, decrease in net assets for the current period. D means increase in drawings for the current period. And C means
Capital.
Capital for current period.
period.
Assets, drawings, capital.
Be careful. It's minus capital.
Yeah.
Assets plus drawings minus capital.
Yeah. Okay. And the funny thing
Net
about it,
assets.
That, I mean,
Yeah,
I
the
guess
increase and
increase
decrease.
and decrease, increase and decrease.
Decrease
for
in
everything.
net asset, yeah.
yeah, increase and decrease in net assets for the
And
current
increase and
period.
decrease in everything,
Yeah.
Yes.
basically.
Assets, drawings, capital.
And really it's just taking the previous and taking the current
So why
and we'll
did
see
we
whatever
have,
it is.
oh yeah, let me write decrease and increase for both of them.
Okay. And remember, come exam time, for my exam, you will see that. For the external, you may or may not see it because there's a bunch of crap going on. But you never know. They may ask you nothing on it, or they may ask you 2 or 3
Make
questions.
them exams as
Yeah.
And the thing is, they
Messed
have
up as you
different,
did last
and the thing
year.
is, you have different exams. Like when me and Julie took our exams the same time, she had a different exam.
Yes,
than me.
every
We had
time.
different
Yes,
exams.
yes,
So
because
when
they're
I
computer
asked her, I was like, I
generated.
didn't have that.
Yeah, they
And she's
put
like,
down
she didn't
different
have that.
No, every time you hit the button, a different one comes up. For every person,
Like, yeah.
they do that on
So
purpose so you
wouldn't-
can't
yeah, so you
cheat.
wouldn't cheat.
No.
Every time I did it, I was like, that's all right.
So you see question 3? Said I had something that I didn't balance. She said,
some of the
balance what?
questions were the same, but not all
Yeah,
of
no,
them.
I don't want to
Yeah, on purpose. Okay. Now this debit credit thing is called the duality convention. So if I ask you that in the test, and say, what the hell is
Yeah,
duality
we remember that.
convention? But I throw out the weird stuff, because sometimes weird stuff come up. Okay? This double entry
Not as
bookkeeping,
bad as you was throwing out, Mr.
I
Wilson.
know. I make it a little more intense so when you go to do the real thing, you just kind of cruise it a little bit. Because you've already gone through all the bull crap. So the duality has to do with the debits and credits thing. Now at the bottom, we have a nice little chart for you. For those of you who need to practice a little bit, debit means to own or to have, true? Asset.
What are they for asset?
Asset, yeah. Own or to have, asset. An asset increases, true? With a debit.
Yeah.
Capital, what happens to that? And liabilities are
They
decrease with a debit. Debit also increase what? Decreases what?
Income.
And increases what?
Expenses.
You see that little how they have it set up?
Yeah.
Yeah. Kind of like what I was asking you earlier in another way. And the same thing on the credit side. If you're still not comfortable with how debits and credits work, that's a nice little thing to play with in your spare time, of which you should have none.
Mr. Wilson, you teaching FA1 again, on FA1. Did they offer that class anymore?
Yes, but I don't think that's coming up until the fall or later this year. FA1 and B1 again. Alright. So rolling right along then into chapter 2. Journey's statement of financial position. Also known as the
Balance sheet.
balance sheet. And the profit and loss statement. Nice stuff. Interesting chapter, very important chapter. Because we're now entering the world of financial statement preparation. And at the end of the day, when all the debits are done, the credits are done, the duality.
We usually have up to page 37.
I know.
So there's a complete chapter. I
Did
can
you
probably-
guys get, she got the whole book
I asked.
Oh.
That's why.
He gave it to me.
electronically.
I asked him for chapter 2 and 3.
Oh yeah, and she got the whole,
Today.
gotta help the book now.
Could you email me? Or forward it to me?
I could.
Yeah. Do you have an email address?
Send it to Lloyd and send it down.
No, I can send it now.
Oh, you can send it out, okay.
That's what I need to do, get in that phone crap. Send it now. I have this phone, I only know certain features.
It's coachbank.com.
So, you pick up the Batelco wire thingy,
I have.
She has the data package.
the data thing.
You can send it.
Yeah. I didn't pay $60.
Neither me, I'm not paying it. It's 30.
$30, yeah.
No,
30.
30, I don't pay it.
It's $30.
But I guess I'm high tech, you know.
That's post or
That's the
prepaid? That's the prepaid.
How much time do you want?
Oh, prepaid. Because if you want
Prepaid, yeah,
postpaid,
you
the
could.
cheapest one is $60.
For postpaid?
Yeah, for postpaid,
Not
for
bad.
real.
Yeah, I think so.
Wow.
But I know at prepaid, you could get like a $10 card or whatever.
Yeah, 'cause they do it on the daily
Card,
thing, yeah, 10,
And they tell you you could turn off.
20, 30.
Turn it off like you, and then if you pick up Wi-Fi, you could disable your
So it doesn't use
data,
up
so
your-
it wouldn't
your
use
stuff.
up your minutes.
And don't use Facebook and download too much and all that stuff.
Yeah,
The less of that you do, the more
I don't
time
think
you.
I'm interested in Facebook, because if I want to talk to you, I'll pick up the phone and call you. I'll do that at home, yeah, you could do it for free.
Alright, yeah. But that $30 thing, the data thing, it's pretty
Yeah,
fun.
I'll tell you another deal.
I don't know, man.
It's very hard to use it for $30.
Really? You have to do a whole lot of crap to do that. How long does $30 normally last?
The $30, they ended, it's only 30 days on it now.
Yeah, that's for 30 days.
Right.
After 30, they have to get a new one.
Right. So they, no matter what you
Before
have
you
left,
could go
It's
over it.
gone.
yeah,
So that means they're robbing people again.
Yeah, they're robbing.
Can't carry over.
you cannot carry it over, yeah.
Is that legal?
But I
Can't
think
carry
now
over.
with the-
They shouldn't have done that.
No way.
I had $30 when it first came out, and When it came to the last 2 days, I still had half of the package left.
Yeah.
So
So how do you know how much of the package you have?
you can check it.
You be tech
You
savvy.
can check it.
Yes, you can check.
Jody?
But I hear saying now,
Yeah,
like
just
if you
walk away
have
and stumble slip.
if you have the posted package, and say if you get, how much ever minute, say if you get the $100 package, it could carry your minutes to carry over into the next month.
But they don't carry over with
Instead of
everything.
one-
Email in it.
They don't carry over with everything. They only carry, like this thing, she was only halfway through and then it blah, blah, blah.
Yeah,
That's a scam.
And they don't tell you.
No.
You call them, I call them and I kept telling them that. And what happened is one of my friends like, use it up. If you have to sit on YouTube and watch movies, use it because they won't transfer it. You can't use it.
Wow.
After 30 days, they just take it.
What a tragedy. They should not do that. Is that even legal? And how do you justify that legally? Doggone it. If you haven't used it up, you haven't used it up.
Yeah, there's no reason why they couldn't.
None.
give us that.
Doggone it. Just egging people up. Doggone it, when it ain't back. It's, you can't cut off the thing. When you're not cutting off the thing, it's, I don't know what the hell next. Alright, chapter 2, introduction to financial statements. And we are told it's an introduction because despite all the financial statements we're going to see in 2, we're going to see lot more and much more sophisticated ones later on as you progress with your accounting life. Okay? That's for sure. Alright, who's in there? Maris hasn't read yet. She's inputting.
I got it. Input something.
Okay, Sam, why don't you read while Maris is inputting?
The statement of financial position and the statement of profit or loss are the basic accounting statements of any business, including sole traders.
Including sole traders, meaning there are others? What are the other 2 types of businesses?
Partnerships and
Partnerships
companies.
and companies or corporations.
You do the football too.
You have the full thing,
No.
Jill?
Send it to Julian, please.
You have Jillian.
I pressed that already.
Whatever, I don't know how you guys do it.
You already sent it?
Yeah, I already
can
pressed
send
in. I
it.
pressed in when you
Okay.
gave me a background.
I'll send it to you in the morning, and I get it. Send it to me.
Okay, keep going.
In chapter 1, you are introduced to the idea of the accounting and business equation.
Remember those?
Yeah.
See, they're already alluding to them already. The accounting equation and the business equation. What's the formula for business equation again? Without looking.
Profit.
P equals?
P equals I, which is I is increase, decrease, and
She
net
always
assets
says
what?
that. I didn't know she's remembered.
Yeah, she just keeps saying it, that's why. Every time she hears I, it kicks in. That's why she remembers it good. I plus what?
I plus D minus D.
Minus-
I
No, but
mean,
I need to learn that to.
Yeah, she so she I means that's whatever it takes. The hell with it. Whatever it takes. Okay, keep going.
If you understand these, you should have little difficulty in getting grips with the statement of financial position and the statement of profit or loss.
Interestingly enough, the accounting equation refers to the balance sheet and the business equation refers to the
State,
The profit and
profit
loss.
Profit and loss.
Yeah.
That's why they say, if you understand those 2 formulas, you shouldn't have too much difficulty. Okay.
say that again, what you just said.
The accounting equation refers to the balance sheet structure. Remember? I have it here. Assets, liabilities, equity. And the business equation refers to the profit and loss structure.
And the
Sales,
business equation.
yeah. Sales minus expense equals profit.
Yeah.
And the business equation does what?
It refers to the profit and loss statement in terms of its components and the outcome. All right, keep going.
These are 2 primary statements described in accounting standards for companies. IAS 1, presentation of financial statements, issued by the International Accounting Standards Board.
Profit,
IASB.
IASB. Anybody remembers what IAS is? From chapter 1?
International Accounting Standard?
Yes. Yes. And you may as well, if you're going to be doing accounting up to, say, the bachelor's or even further, you might as well get used to those kinds of things because those things will be coming up more and more. IAS, IASB, and so on, and some other stuff. Okay. However,
As stated above, sole traders also use these two basic statements.
okay. Keep going.
The statement of financial position layout shows assets, liabilities, and capital in the same way as the accounting equation.
True or false? Yes.
Sole traders generally have a choice over whether they A. aggregate different items under key headings on the statement of financial position and the statement of profit or loss and include extra detail in supporting notes, or B. include more or all of the detail on the basic statements themselves.
Yes. And finally,
We focus on the general headings under which assets, liabilities, income, and expense are grouped.
yes.
But as we progress through the examples, you will see that for sole traders, further subheadings or detail are sometimes included on the face of basic statements.
Thank you very much. So now we are introduced to the statement of financial position and the statement of profit and loss. First of all, the statement of financial position, we're on page 27, says clearly that it is comprised of assets, liabilities, and equity. That under assets we have current and non-current. Under liabilities we have current and non-current. Do you have any current and non-current capital?
No.
No. These we don't. And then we are, again, they tell us again that the statement of financial position is very similar to the accounting equation. We know that. We've beaten it to death. However, the equation they're showing us has some other words that we know, but let's look at them. Just the middle piece, capital introduced plus retained profit. Are they normally one number or two numbers?
Capital introduced under retained profit?
Yes, on the balance sheet or the statement of retained of financial position.
They're two different.
Two different categories. Normally capital would be shown as capital under equity and retained earnings would be shown as retained earnings. Remember also that retained earnings are an accumulation of profits from one year or one period to the next. So then we have a simple expression at the bottom: assets, capital, liabilities. Piece of cake. But that's only to get you all warmed up. Because if you turn over to page 28, then you see what a statement of financial position really begins to look like. Now I don't know if anybody's ever done American accounting. But if you have, yeah, so you'll know then that the structure here is a little different from the American method. In the UK, they start with the non-currents and go down to the currents. In the US, they start with the currents and go down to the non-currents. No big deal. Same principles apply. By the way, where did the Americans learn their accounting?
From the British.
Of course. They just change it around to suit their own personal agenda. Alright? So this statement of financial position begins with non-current assets such as Are these terminologies important to know?
Yes.
Yes, because we will use them throughout our professional lives to describe, in this case, assets, and in this case, non-current assets. The Americans use another word for non-current assets. Anybody knows? Starts with F.
Fixed assets.
Fixed assets. And then they use another term called plant assets. plant. These are all terminology for non-current assets. Then we have our current assets, which are
Inventory, receivables, cash.
and cash at bank in hand. The Americans would start with cash, the most liquid, and work down to inventory, the least liquid. The British start with the least liquid and work down to the most liquid. It's okay. It's a matter of preference. And then on the capital side, what do we have sitting in there?
Proprietors capital and retained profits.
Proprietors capital, which is the investment by the owner, and retained profits, including what?
Previous and current year's profit.
Well, they're just kind of reminding us what retained earnings are. Previous and current. Look at what's sitting under non-current liabilities. But other liabilities get all the way down there. After capital.
That's how we do it.
That's how they do it. It'll change slightly later. But for now, that's how they present it. I don't know. They're probably trying to make regular folk miserable. Anyway, we'll go with the flow for the moment. Non-current liabilities are characterized as what? Loans, because loans tend to run for more than 1 year. Current liabilities, as we discussed, are any payables that will be what? Paid within
The year.
1 year. Notice what else is sitting under current liabilities.
Payables and bank overdraft.
Bank overdrafts in particular. Why is a bank overdraft under current?
Because it can be paid.
Yes, it is revolving, they can call it any time and require that you make the payment. Okay, so therefore it is current. Is that time already? Where the hell does time go? Who's gonna? Can you just read that little piece for us, Mars?
Where?
As that. In inverted commas, do you see that?
Oh, as that has been picked out in bold type in these illustrative examples in order to draw your attention to the fact that the statement of financial position represents the financial position at a specific point in time.
Point in time. That is a very important fact. In other words, whenever you pick up the statement of financial position or balance sheet, as that means, in this case, as at December 20th, 1983. Now, bear in mind that also means that the balance sheet will change on December 21st. True or false?
Yeah.
Because on December 21st there will be what? Transactions on that day. And any transaction, even one, that occurs the next day changes the composition of the balance sheet or the statement of financial position. Okay? And that's what we'll play. That's a good point. Please, if you haven't done so already, for next week's class, please read chapter. If you haven't done 1, read 1, but especially 2 and 3. Because we're going to be done with 2 and roll into 3 next week. Good night, Jenny. See you on Saturday. 12 noon sharp. God. Yeah. What can I say? I'm guilty. Guilty as charged. Good night. Take care. See you on. Okay.
I have some questions for you, sir.
Fantastic. You have them written down? Great. Sorry? Well, what you could do if you feel really froggy, you can just email them to me for me to consider. You hold. Okay, that's fine. Okay, take care. Okay, take this. Jen, for MA2, you have what chapters do you have for that?
You mean we did Saturday?
On Saturday, yeah.
Only that chapter you gave me. 2, 3. I have 1.
You know 1 and 2. You know how to reach Miguel?
I emailed him, he said he was supposed to send it.
Email him again. Okay? Email him again. And keep emailing him until he sent. Email him every day.
Well, actually, I come in that tomorrow, so.
Okay, so don't leave until you get it. That's the point. What about for this session?
I think she emailed me.
The
Whatever.
one?
Yeah, he gave her.
Okay, fantastic.
Yeah.
So for Saturday then, we're done with 1. We're in 2, so you can read 2 and 3. You can go back and read 1 at your leisure.
Yeah.
Okay. So you can read 2 and 3 for Saturday, as much of that as you can get through.
For MA2.
For MA2.
Okay.
Okay.
2 and 3.
Yes.
All right.
Okay. Take care.
Have a good day.
You too. Hi, son. Okay. Yes, hi. Who am I speaking with? Rodney? Oh, Jordan. This is Mr. Wilkinson from across the street. Somebody needs to come and collect the camera and the computer and all that stuff. Yeah, I'm done already. Okay, thanks.
Yeah, I supposed to bring that paper. They trying to implement, you know, they coming up the central bank. So, you know, they trying to get things in order. But that thing what you fill up, if you don't do that, it's a couple of them things they don't take into consideration. Because I think they were saying you gotta look at something like life insurance and stuff like that. But it's you don't do it enough. And then something else. Yeah. And then there's a barrier to that service ratio, they don't know like how you understand that. Yeah. Yeah. All right then. Take care.